They always like distance so that you do not understand that their policy over here is having this impact over here. This system is so fragile that holding your wealth in there is so dangerous. They want you to think that this is an old relic. Why are they buying it hand over fist? Why have they never been able to duplicate it in a lab? Silver as well. There's a finite amount of this. As you have seen, there's an unlimited amount of that. It's easy to create new. It's easy. They just have to push a button and they can create as much as that as they want. But what happens is that whatever is already out there goes away. It loses more and more value until we hit zero. Please tell me why nobody talks about that. But the reality is we're at endgame and we've got so many things in place that can push us over. Central banks recognizing the revaluation potential of gold. So central banks have what's called a revaluation account where gold is revalued on a regular basis based upon their initial cost and the current inflated value of it. But this is the tool that they will use to do that overnight revaluation, where they take this garbage that has absolutely no value. Yes, you can still buy stuff with it right now, but that is only because people still trust it. They grew up with the dollar, or I don't care what country you're in that currency, right? And what did they know? They knew that people marry the legal money of the state. So don't change the name, just change what backs it. Just change what it is. Okay, well, that's what I think about that. But they take this that has no intrinsic value, used only in one place, and they revalue it against gold, which is used in every single area of the global economy, period, end of discussion. Does not require a government to say this is legal tender. It is money for thousands and thousands and thousands of years. That's how the overnight revaluation occurs. That's when they lop off those zeros, and whatever you have in the system, I don't know how much that revaluation is going to be, but typically it's about 1,000 to 1. So you go to bed at night, you have $1,000. When you wake up in the morning, you have one. In the meantime, spot gold, the contract gold, right, has gone up 1,000 times, 3,000 times, whatever that number's going to be. What in the world do you want to be holding when that happens? Because it will happen. It is inevitable with everything that's happening. And with banks buying more gold than they ever have historically, they're preparing for the revaluation, period. After it became apparent what was happening twice, not once, even though that's all that they seem to talk about in here, but they raised the rates on the emergency loan program to stop the arbitrage, which, by the way, ends on March 11th. So they knew for a long time that they knew when they first kicked that program off that was what was going to happen, and they saw it happening again, and they waited until just recently to turn that free money spigot off. Okie doke. But they're going to see higher borrowing rates effective immediately, but of course that will not impact all of the loans that they gave out during that other period of time. And shocker that the use of the Fed Term Funding Program is at a record high before they close the spigot. It's amazing. And now it can be no lower than that of reserve balances in effect on the day that the loan is made. But the loan is for a year. So wherever that is, yeah, those that already got in on that free money trade, until those rates come down, they're still making free money, hand over fist. It doesn't surprise me, given the negative press and the very real arbitrage, which is those difference in rates for the free money, that presented itself. So of course they had to stop that, because the appearance of the Fed giving banks free money is not a good look, even though that is exactly what's happened and intended.
Grasping the significance of gold and silver in today's economic environment is essential. According to market analyst Lynette Zang, while mainstream opinions may downplay gold, central banks are purchasing it in substantial amounts. This indicates a notable potential for gold's revaluation. The process of revaluation adjusts gold's worth in comparison to fiat currencies, which can quickly lose value due to inflation. Historically, these revaluations have been considerable, making gold a dependable asset for preserving value. The trend of central banks accumulating gold and silver suggests a strategic effort to protect against financial instability and the risk of currency devaluation. Unlike fiat currencies, these metals are limited in supply and possess inherent value. For individual investors, owning physical gold and silver offers a safeguard against inflation and helps protect wealth during times of economic uncertainty.
They know that this problem hasn't gone away. Even though they make it look like it did, it's not. It's infiltrated throughout every single bank. The OCC, which is the Office of the Comptroller of the Currency, you know I use their stuff all the time, particularly about the derivatives in the FDIC-insured banks, says that his agency, the Fed, and the FDIC are crafting a plan because right now when the banks use that discount window, it makes them look bad. So they want to change the rule and also change the image. The bid to change rules affecting discount window borrowing and bank liquidity requirements follows last July's sweeping proposal to require many banks to hold more capital to help them withstand a crisis. And of course, the banks are fighting that. Of course they are. So, why should they ever hold it? Aren't we in an ample reserve regime where the central bank will just come in and have their back? They seem to have done that last March and April. They always like distance so that you do not understand that their policy over here is having this impact over here. This system is so fragile that holding your wealth in there is so dangerous. But if you have physical gold and silver, you hold it and you own it outright. Because all we ever really see is just the tip of the iceberg. It's really all of those derivative contracts that are written against this that are impossible to ferret out because that is such an opaque market. But, we've talked quite a bit about securitization and how everything has been turned into a trading product for Wall Street. So let's take a look at a few of those levels. This is by far not all of them. But student loans, 1.7 trillion, plus all the bets on top of that. Auto loans, 1.57 trillion. Again, we aren't seeing all the bets against this. Consumer credit, 5 trillion. And all those bets above it put it well into the quadrillion. And by the way, as a little reminder, these gray bars are crisis or official recessions. So what is always the answer to a recession? Inflation, more debt, more currency devaluation. And all of these are turned into packages and sold to you, the public, through your 401k, through your pensions, through mutual funds, through oh so many things. And you're the one that's taking the risk. But hey, if everything implodes, who are you going to talk to? If all your wealth is held in the system, who are you going to talk to? When will this end? Why can't they just keep doing it forever? Well, they'll do it until enough risk has been transferred. Once enough risk has been transferred to the public, that's when this game ends.
As the global financial system becomes increasingly unstable and governments accumulate massive debt, the strategic importance of gold and silver becomes clear. These metals offer a hedge against inflation and economic instability, preserving wealth as fiat currencies devalue. Central banks are buying gold in large quantities, using revaluation mechanisms to stabilize their finances. Silver, with its dual role as a precious metal and industrial commodity, also presents a valuable investment opportunity. In a world where geopolitical tensions and economic uncertainty are rising, holding physical gold and silver provides security and stability. Investors should diversify their portfolios with these metals to protect their wealth from the risks associated with fiat currencies. Understanding these global trends is crucial for achieving long-term financial stability.